Yo, what's good, guys? Um, so now we're going to do some new week analysis on DEX 600 down. So we're going to start. Let's just dive straight into it, shall we? So we're starting on the weekly time frame, and off of this movement, there's that certain term that says um the patterns that happen on the higher time frames are literally the same as the patterns that happen on the lower time frames. So off the weekly chart right now, we can see we have an impulse there that broke this level right there. This impulse then had a nice correction move, which looks like a flag. We broke out of this corrective move, retested there, broke this structure here, broke it, went higher, come back for a retest, and now we're due to go higher to take out these levels right here. So we'll mark out this weekly high right there with our nice blue line, and the next level that we're going to look at for support that we're retesting is this one. So let's mark it out as well right there. All right, amazing. So now let's scale down to a lower time frame and see what's actually going on. Okay, so this is what we have on our lower time frame. This is the daily time frame. So what we come to notice here is that price was more or less in a sideways move here. We were consolidating from there, made a low, made a high, made a low, made a high, didn't close above, made a low, didn't close below. So we're more or less consolidating on this area here. Then we finally broke out of this consolidation. We broke out and came here. Then we formed a new low, which is here. This is our higher low. We came back up top, hit there, made some liquidity. We didn't see how this candle right here doesn't close above this. Yeah, so after this doesn't close above this, we came lower. Yeah, then we picked up some orders here, some liquidity there. Then we went and closed up above. We broke this structure here, this liquidity here. This double top is a liquidity that we've taken out. So after we took out that double top, we went, made a new higher low, broke structure there, higher low, broke structure again, higher low, broke structure higher. Okay, then we came and took out this higher low right there, and the move of us just taking out this higher low, this is going to act as our early sign to market shift in direction for a structure shift. So after this level was taken out, market then went back up there, retested the supply up there, then it broke lower, made a lower low, made a lower high there. We hit there, we didn't close below there. We came back up for a retest, then we broke lower right there. So this move that is here isn't the one that's responsible for breaking there, because the move coming from there closed right there. It didn't close below. So this was a new low. This high is now the one that's going to act as our lower high, and it's the one that's responsible for the break of this level right there. So after price broke that level, then we spiked back up right there. And what I think caused the spike up to close above this level here is the fact that price actually retested off the supply here. So after that, we went up there, and now we're going to be waiting for price to come back low here and hit the supply demand, I mean. Yeah, hit the demand, and then we'll look to take price higher for the coming week. So today is Sunday, and this marks a new week. New weekly candle is opening. So for the first half of the week, it's very likely that the weekly candle will trade coming down low there till we get a retest, and then we will be looking to continue with the bullish narrative that price has been giving us in order to take out this level right there. Yeah. All right, so for this week, we'll look to take some shorts if opportunities show up, but these shorts will not be trades that we'll be looking to hold for a long period of time. There'll just be some short trades, short period of time while we're waiting for our bullish move. So now let's go ahead and mark up our markets properly. Yeah, so here we said this is where we had our break of structure. Notice that I'm marking the break of structure just with the letter B. Okay? And next we have this level right here. This is the low that was responsible for this break of structure. After that, we printed a new high that is right there. We had this high. After this high was printed, price came back down, retested this demand level that is right here. This demand zone right here. Retested this demand, went high, created liquidity because price did not close above this high, instead it spiked to it. So after creating this liquidity, we will mark our liquidity with just $1 right there. Liquidity was created, price came back down, spiked into this other demand zone. Okay, so price came back, hit into this demand zone right there, printed a new higher low, then we came and broke structure. We're putting this as a break of structure because price actually closed above this level. So here we're going to write liquidity slash B, meaning we had liquidity and we have broken structure, meaning we've taken out that liquidity that was lying on top there. So next we had price come back down here, print a new higher low. We wouldn't have taken this trade because it didn't come and hit our demand there. So after it printed that, this is our higher low right there, and then we have our high that was taken out by price right here. Then price came and printed a higher low right there, and then new higher high. So after this level, price swept this level clean and did not close above. After sweeping this level right here, price then broke this level that is right here, which is our early signal of changing direction, going to the downside. Okay, so once price just shows us it's about to change direction, we remember, oh, price didn't come to our demand level earlier. Okay, but it's been making these smaller swings going to the upside, just pushing it slowly to the upside, and this is also a form of liquidity. Okay, we can either mark it out with a nice little trend line like that, or we can leave it. I tend to just leave it because I just don't want too many lines on my charts. Okay, so after we do that, price broke and shifted structure. Then we came back up for that retest before we take out this level. Okay, so shift in structure, then we come up into the supply level. That's right there. Let's mark it out real quick. So we hit our supply level there, then we went lower. Okay, so we took out this level that hit into the supply. So we didn't close below this, we didn't close below, we just printed a new low. So that's not a breakout structure. It might be on the 4 hour, but on the daily right now that we're marking out, it's not. So we went high. On the 4 hour, I'm sure there's a supply there. Okay, there's a supply there on the 4 hour. So we hit that supply right there, we retested, came back down. Okay, after we came back down right there, we didn't close below this level. Instead, we went back up, printed another high, which is right there. Then this high, or this leg rather, is the one that was responsible for closing below this level. So now we have a B. This is a valid breakout structure because it's the one that closed below. These other legs were just spikes. This is a spike as well. Okay, so after we printed this new leg right there, we'll notice that it went and finally hit into our demand level that we were waiting on right there. Okay, we hit our demand level right there. Then price shifted and went to the upside with a strong impulsive move right there, showing us that there is momentum and the buyers are now starting to step in. Okay, after closing above this lower high, we printed a market shift, which is another sign showing that the market is going to now start trending to the upside, just like our higher time frame weekly bias that we looked at earlier. Okay, so from earlier we saw that once a structure shift is printed, the market now starts to drift in the direction of that shift. Now a new structure shift has been printed, so now we're expecting the market to now start going in that direction, with the weekly being confluence as well. So after this structure shift, the market left a nice demand zone that is right here. Let's just mark it out. This is our demand zone that we're looking to take our trade entries on for this week, and we shall be trading in line with this point of interest, trading to take the markets into this level. And if we do miss some of the entries, we shall then, and the market does end up in here, we shall then look for opportunities when the market gets here in order to take it long, and we shall be targeting that level right there at the top. Okay, so now let's just delete these lines and we'll be left with that. Yeah. Okay, so now it's looking clean. Let's now shift to the 4 hour time frame so that we can get a better look at what the market is actually doing. Okay, so this is what we have currently. We have our structure shift that happened right there. That happened right here. Then we printed a new high, which is there. Okay. And next, we also left this higher low. That's right there. So, the markets came up there, took out, made a structure shift, and now we're waiting for a retracement into these levels right there. Notice how this demand zone lines up perfectly with these levels that are right there. there. So if we take it across, this would be like a perfect head and shoulders, this being the left shoulder, your head, break of structure, your right shoulder. Then we move to the lower time frame on the 15 or 5 minute. Look for a similar pattern but on that lower time frame. And then we shall use that to take our entries to the upside. And this might actually look like this. Let's see. What we're going to look for on the lower time frame is a pattern that is going to be similar to this. We hit our point of interest, high, we sweep, then we get our structure shift there, taking out this level. Then we wait for price to come back and hit like our 70% on the fib, anywhere between 64 to 70. And we can use the demand zone of this leg that caused the structure shift. We use that demand zone and our 64 to 70% on the fib as an entry point. Stops just below here, this level, and then we shall be looking to target the highs, which is this one that's right there, going up into the highs. Okay, and what scaling in would look like for this particular trade on the lower time frame, once we get our shift, price does the whole thing, print a low, structure shift, come back, fib. Once we break and start going higher, once this level right here is taken out, price will then do the same thing and come back to this demand zone. And then we'll look to take it on the 70% of the fib in line with the demand zone. And then we will scale in with more entries. Yeah? Okay. And then we will be targeting this very high. Once this level is broken, we move our stops from there for our initial entries and put them right there. So stops for the first entry will be above break even, and stops for the second entry will be at break even. Okay, so that's all for this analysis of DEX 600 down, and I'll keep you posted on how I take these trades, obviously in the next week or the other week, but otherwise I'll definitely keep you posted on my ideas. Peace. Have a good one, eh?